Hello, everybody. Welcome to Thursday. The S&P 500 was up almost 0.3% today, closed at another all-time record high. Things are quite good today, actually. The 30-year bond auction that went off for treasuries, $22 billion worth, went off quite well. Still an appetite. Sometimes the longer-term bond auctions can be a little bit more, risky in terms of whether they'll do well or not. But the market is still good in that area, which is great. And so you got the bond market altogether today did okay also. And matter of fact, there's been a lot of concern about the bond market and how it's going to react to, like the big, beautiful tax bill and all those types of things. Bond market is still okay with what's happening. You can look at it straight from just government bonds or the whole market as a whole. Either one is showing, I think, an okay signs. There's no real crumbling that's happening. We'll see what happens as time develops. I do worry sometimes as we start to develop more and more of our debt. If we get back into trouble again, like we had in 2008, or even during the pandemic, we used a lot of money to push out to kind of get stimulate the whole economy again and get things going. Are we going to be able to do that as easily as we kind of build up this debt level? But and so we're looking at kind of what's going on for the overall stock market. Keep in mind that the first 2 weeks of July are the best 2 weeks of the year historically, and that's because the end of the first half happens and there's a lot of different factors that come in. They call it a wall of cash that's coming into the stock market, mostly to do with rebalancings and cash that gets invested at the end of the first half type of thing that comes in. And I call it dumb money. It's going to come in no matter what, no matter what's happening with the economy or tariffs or any of these things. And so you do get a pretty good run. Historically, that has peaked out on the 17th of July. So I think it was the 16th last year. And then sometimes we have some softness into the summer. We've had a couple drawdowns that have happened. I remember in 23, it went from basically the 16th of July all the way till the end of October. The market dropped. So there's kind of a seasonal factor that's coming at us here, irregardless of what else is going on. So the big things we're going to be watching for here is just, kind of what's happening with inflation. The inflation numbers have been good, but if you dig into the inflation numbers, part of the reason they're doing good is because we're finally starting to see some softening in the rents and those types of things. But if you look at goods, they're going up. I mean, just from the first 5 months of this year, we've seen goods go up from anywhere from 1.5% to 4.5%, which you've got to annualize that out, all the way through. You're looking at, 3.5% to 10%, depending on the good. And that's quite high, right? It's going to be inflationary. That doesn't really include in that 5 month period the full impact of these tariffs. So I did see some reports today saying that so far the tariffs are being passed through about 80% to US companies and consumers. It just means that the exporters so far are absorbing about 20% of those tariffs. And then we'll see what happens in terms of the split of how much of that ends up with companies, how much of it ends up with consumers. Both are problematic. If companies absorb too much of that, then they're going to do less hiring, less investing, those types of things, which could create a higher unemployment situation. And obviously, if it goes through to consumers, they might buy less just because it costs more. And so again, we're slowly starting to see some of these impacts. I've been saying for quite a while, it's really more likely to see it in kind of the August, September, October timeframe. And now with the pause on some of these tariffs to August 1st, it kind of pushes things back a little bit further as far as that goes too. So, again, just saw a number today, 17.6% is the average tariff with the current tariffs that are out there, including the 50% on copper, which I think is going to be really interesting to see how that plays out as far as that goes. But anyway, that's what's happening today. Again, good time frame for the stock market. Bond market's doing okay. We just sold some bunch of treasuries. That's good. So there's some things that are happening that are quite positive right now. We'll just kind of wait and see how things go, especially after this first half of July. See what the market does then. So anyway, I'm going to have the show tomorrow. We'll look forward to doing that. It's Talk Money with Tom at noon Pacific Standard Time. You can ask questions. I'll do a summary for what I saw happening this week, and we'll answer other questions throughout the show. So look forward to seeing you then. Thank you very much.